Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to the show. Today I'm pleased to introduce the top team of Bain Capital here with me, John Connaughton, who's the co-managing partner globally, and Amit Chandra, who's the managing director. Thanks, gentlemen, for joining us here on CNBC TV18. Now, John, welcome to India, and it's good to see you here. Now, a lot is really happening globally. There's global trade war tension, and we are getting into a rate hardening cycle as well. But we would like to know your India perspective in the midst of all of this, and certain things which are unique to India right now is rupee depreciation as well as crude impact as well, that is at uncomfortable level. How do you see India as an investment destination amidst all this, and especially when we are getting into an election year?
Our strategy and the marketplace that we invest in India has been a terrific long-term story. It really has grown at a sustained rate of 7 or 8%, or most recently 8%, which is a great landscape for our investment activity. But we don't just look at that growth prospect. We also look at what we can do for companies to help them grow faster. For us to generate the types of returns, we need to have a stable economy. We need to have a supportive regulatory and governmental policy structure. And as we look at India, the opportunity to do the Bain Capital strategy inside a high-growth market is very exciting for us. We've built up our team over the past 10 years. We have 4 managing directors in region actually driving our investment strategy. And that commitment has allowed us to be one of the most active investors in the last 5 or 6 years. We've deployed, I think, about $3 billion in the region just in the last 6 years.
Right. So while you sound so excited about India, Amit, let me come to you. Now, India doesn't have a dedicated fund. It's the Asia Fund which gets the money to India. 20 to 30% of that is invested in India. You have less than 10 assets in which you have invested. Now, what is the percentage of total assets under management of global Bain Capital which really comes to India, and is that set to really increase?
So, Nisha, India has actually been a very core part of Bain Capital's strategy ever since we actually started in India 10 years ago. We've been in Asia for 13 years. There are 3 core markets that we work in, China, Japan, and India. So, India is not just an important market for Bain Capital in the region or globally, but I think we are very relevant to this market, relative to any other player that's been here. The other point that I just wanted to address, going back to your question to John, is that there's obviously a lot of concern amongst people on what will, the view of players like us be because of the rupee depreciation. You asked that question.
Yes,
I think it's important that will returns be impacted. I think it's important to put the facts on the table. If you take a long-term view, which is what players like us do, over 5 years, actually the rupee has not extraordinarily depreciated. In fact, the Indian rupee's depreciation has broadly been in line with the pound, the Aussie dollar. In fact, we've done better. We've outperformed relative to those 2 currencies. Broadly, we've been in line with the Chinese currency. We've even been in line with many other currencies in other developing markets. So we've actually not had a bad run. The dollar has definitely strengthened, but relative to other places that we invest in, we've not had a bad run. Certainly what has happened is that in a short period of time, because of combination of oil prices and trade wars, I think the dollar has suddenly appreciated. But I would not hesitate to add that none of that has really taken us by surprise. When we invest in India, we always add a rupee risk premium.
Yes.
And so that gives us the comfort that over long periods of time, there will be some depreciation in the rupee. And as long as you factor that in, there's enough returns to be made over long periods of time.
You mentioned about your investments, Hero, Genpact, partly exited from Genpact, made some returns, Hero Moto, you made the returns, and Axis, the most recent investment. I'm glad you brought it up. John, help me understand, what was the investment philosophy behind the most recent and the largest transaction that was done by Bain Capital in India by buying stake in Axis Bank?
First of all, I think, as you look at our strategy, I think we're trying to find businesses that haven't really reached their full potential. We're trying to find a business that is misunderstood by the marketplace. Particularly public marketplaces oftentimes look more towards the short-term results rather than the secular trends for a particular business. So in the case of Axis, or frankly any of our investments that we make, we're looking beyond sort of the conventional wisdom of the moment, looking at the full potential of the business, and oftentimes it's misunderstood by the market.
The same question was also posed when we invested, for example, in another private lender, which was L&T Finance.
Yes.
And since there, the story has played out a little bit more over 2 years. It's become evident what a management team can do with a good market position, with the benefit of recapitalization, as they take provisions, as they reposition a business, and then a market starts looking, to John's point, at what was not obvious. Because often, the markets get very focused on a short-term view.
Right.
And, when the longer term becomes a little bit more evident to the market as it plays out, then stocks start getting re-rated. And I think in case of L&T Finance, which has been a classic story, the re-rating was terrific, and the stock massively rallied, and at one point of time we were 3 times our money in just over 2 years. And I think what we'd hope to see in Axis is that the management team is able to basically reposition the bank, is able to take the capital that we've infused to go in and clean up the book. They've been taking accelerated provisions with RBI's, under RBI's diktat, and hopefully the strategy is then able to play out. So time will tell. Let's see how it plays out. But we're hoping that it'll turn out to be a good investment.
Since you're talking for the first time after your Axis investment, let me probe you a little more. This was considered a risky asset, especially from the point of view of the large corporate lending, and you don't know how many risks are involved there. Now, what is the kind of risk-reward trade-off that you did, and what is the assessment in terms of risky scenarios that you really did? Was it a difficult trade to zero in on?
You see, Nisha, at the end of the day, we are a high return investor, and so we obviously, when we make our investments, we do so with the hope that they generate returns in excess of what market participants expect. And that means sometimes taking a longer term view, which, making contrarian bets, and our hope in this case is that, we are making a contrarian bet, and time will tell whether we are right or we are wrong. So let's wait and see how it plays out.
All right. So in 1 year, almost of investment, you invested close to about 500 rupees per share. It is closer to 600 rupees per share, but market volatility has also been extreme. Now, the most recent development there, and Amitabh Chaudhary for a very long time, so appointed as the CEO of Axis Bank. What is his immediate mandate as the top leader of Axis Bank at a time like this? And as a financial investor, a large one at that, what is it that you're expecting from him?
Well, I think he's still not joined, so let's wait for him to come on board. But obviously, as he's someone who is very well regarded, and if you look at the analyst commentary on his appointment, the market analysts have really welcomed his appointment as someone who has an exceptional track record, and the expectations are very high that he'll be able to take this platform to the next level, as he was able to create extraordinary shareholder returns in case of HDFC Standard Life.
All right. My one more question on Axis Bank. In terms of exit strategy, yes, it's been only 1 year, still early days. But in the past, there have been suitors interested in this company. In the future, when the time is ripe, how are you looking at an exit opportunity? And is that something that you have given some thought to?
We haven't given thought to it. It's very early days, Nisha.
Let me come to John. John, how do you rank India when it comes to your portfolio returns, dollar adjusted? Because L&T Finance, you made some returns. Hero MotoCorp, you had Genpact partly, and some others which are probably reaching that fruition.
Yeah, our return profile in India and Asia has been terrific and consistent with developed market returns. And frankly, we have to underwrite to slightly higher returns in depreciating currency markets. So we generally do, as Amit said already, put some form of premium on the expectation for longer term currency depreciation. When we look at what our strategy is, it's not just about an asset play over a short period of time. Are we seeing partnerships with management? Are we seeing the value addition of how we can grow earnings differentially? And how do we actually look at the M&A and business development opportunity even outside of India for those companies? And I think that those metrics makes us believe that this is a really terrific market for our strategy for private equity, not just a momentum strategy.
So your Asia 4 fund is raising funds right now. How big is that fund going to be, and how much could really make it to India?
Well, we have targeted about $3.5 billion of funds, and frankly, our first fund was $1 billion, our second fund was $2 billion, our third fund was $3 billion. So we're not just trying to raise the absolute largest size fund, but we are trying to deploy an increasingly higher amount in all of our geographies. That's one of the reasons why India has gone up in investment velocity over the last 5 years, is our fund size has gotten larger. We've built a team, we have more track record. And so when we get to the higher level of 3.5, and it may be close at a higher amount, there's an excess demand for that fund. There's a lot of investor interest in our platform. We will see the velocity grow up accordingly for India. It's not in a given year. We look at it over the cycle of a 4 or 5 year investment period because the volatility will still be there.
We are not very predictable. We do invest in market leaders. And because those land up being big, large deals, our business is a little bit more easier to predict over a large cycle than actually over short cycles.
So to that point, I have 2 questions to ask. Is it being overcautious when it comes to investments and therefore you have a small portfolio here in India? Or on the other hand, your ticket size is so large for each transaction that it is restrictive?
Yeah, I think that the element of what's most important to us is the applicability of what we can do to support a management team. And so when you talk about scale opportunities, they just have more opportunities to go after adjacencies in growth. They have better management talent to go after market share gains or expansions in other geographies. And so smaller companies just generally don't have the same type of resource capabilities that I think the larger companies do. And so when we look at our strategy, some of these larger companies just have the ability to do more with them than some of the smaller companies.
So Amit, where are you spending most of your time? Of course, your core areas are financial services, IT, BPO, industrials, and you have consumption as well as TMT also.
And healthcare, I would say.
And healthcare.
Yes.
So which is the area which is taking up most of your time?
I would say all those areas, because for us, we tend to take a 4-5 year view on exactly all those verticals and then, not really focus on everything else. And it does become difficult to be predictive on what exactly will happen in which year in any of those spaces.
What's looking attractive?
Well, at this point of time, actually, some of the things which are sold off are actually the ones which are looking most attractive. So, we are spending a lot of time on healthcare because, it has, it has gone out of favor a little bit, and financials are beginning to look attractive again, as are industrials.
All right. So, John, you have done a lot of work in the pharma healthcare space. Now, you have Emcure in your India portfolio. Now, pretty much most of the pharma companies have been plagued by the US FDA concerns in India. How do you, from outside, view this sector right now?
Well, we have done a lot of generics, life sciences, CROs, clinical research organizations, and I think we're seeing quite a revolution in how the marketplace looks at all these companies, but also how they're evolving their business models. And we're seeing the marketplace become much more global. There's a life science revolution going on in each of the major geographies, in the developed world, in the US, in Europe. We're seeing it in China. And certainly India has always been a big part of that ecosystem, particularly around the generics business. So our view is the regulatory marketplace is beginning to harmonize around a view of what it takes to actually get drugs approved in each of these markets, but it's becoming more similar as opposed to what it used to be, which is quite distinct. And so if you want to be successful as an Indian generics player, you've got to be successful in the global marketplace. And we're seeing the capabilities of the India generics companies get better and better and adopt sort of the practices, and the credibility of the FDA in looking at that will also go up in kind.
So many healthcare opportunities are available here. Are those attracting you at this point?
Yeah, I think we've continued to spend a lot of time in the sector generally because, as John mentioned, healthcare is actually one of our biggest verticals globally. Even recently in Europe, we closed one of our biggest healthcare investments, Stada, good indicator of, our interest in the space more broadly. And so even in India, we continue to spend a lot of time in this segment. I mean, it is a very interesting segment, and Indian companies have actually come a long way in building capability, not just India, but India-centric capability to service global markets. And so that space is one of deep interest to us.
What's really evolving also fast, and you can get some learnings because you're ahead in the learning curve overseas than India, is the whole data explosion, automation, artificial intelligence. You have some IT BPO investments like Genpact, Quest, and Big Data Center as well. Now, how do you see that opportunity developing in India? Is that an area where you would like to spend time on?
Well, yeah, I mean, I think that healthcare specifically, if you want to even narrow it to the impact of those types of digital transformations in healthcare, has been huge. And certainly the value-based payment systems that we see evolving in the U.S. marketplace are all based on not just doing the service, but doing it with a high-quality outcome that you can track and get paid for. And so the clinical quality associated with what you do in a medical procedure is becoming much more digitally oriented, much more tracked, and the protocols are going to be similar, and you're only going to get paid for the outcome. And so when we look at sort of what we're doing in the U.S., and frankly even in other emerging markets, even Brazil, we have huge amounts of data to support the decision-making of our clinical delivery system. And so that's going to be a huge transformation.
So Amit, at this point, entry mode, exit mode, or wait and watch?
No, I think, given our business model, we are generally always looking at doing both. It's important for us, to always be nimble in looking at monetizing investments. That's been a learning looking at the journey for the last 10 years. And so we do look at taking chips off the table as and when investments are mature. But at the same time, when we raise new funds, we are constantly looking for opportunities. And so, the team is constantly focused on both sets of things.
Is Himadri Chemicals also gearing up for an exit then?
Himadri Chemicals is, in fact, doing excellently at this point of time, as you would have. They've had a record quarter just recently. But yes, it's in its 7th year, now, and at some point of time, we'll have to decide what we want to do with it.
Is market volatility a dampener for taking these decisions right now?
You see, as a responsible shareholder, we always think very hard about what's the right time to take our decisions. And, obviously, when you see a lot of volatility, you take a call on what's the right time to press the button for any investment.